Good morning. Can everybody raise your right hand so that I know that everybody is here? I'm not going to take a roll call. Now, can you touch your chin? That's not chin. I didn't say you do what I'm doing. I said touch your chin. All right. So now we are all awake. All right, ladies and gentlemen, the topic for this discussion is quite interesting. Now, from inward to outward. So can I have my fantastic panelists here on the stage, starting with Mrs. Harjeet Joshi, former chairperson and managing director, Shipping Corporation of India. Thank you, ma'am. Then Captain Vikas Vij, he's Indian ship owner and president of ICC Shipping Association, a body of the Indian coastal ship owners. And he's also director and treasurer, Indian Maritime Center, an apex body or federation. And he's also trustee of the Coastal Maritime Officers Welfare Trust. And Mr. Devkinandan, he is the chairman of the Indian Maritime Center, president of Indian Ports, Private Ports and Terminals Association, vice president of the Society of Affordable Redressal of Disputes in India, and that's all he has been doing free of cost to help the industry. Now you have to pay your bills. So managing director of JSW Middle East Liquid Terminal and also managing director of the JSW Overseas FZE. Then we have Mr. Jayendu Krishna, director, head of Maritime Advisors, Drewry. He's come here from Singapore. The format that we are going to follow is we are going to have two presentations, one by Jayendu, other one by Mr. Devkinandan. It would be crisp, to the point, fantastic presentations, so they would be on the side screens, not in the center. All right, and then the other panelists later will speak for about 3 minutes each, 3.5 minutes, followed by a panel discussion. We would like to have audience questions. I would prefer your questions more than my questions. So please keep some of the questions prepared. All right, so a lot of things have been talked about what's happening in India. So I'll do my part less than a minute. According to forecasts, India is poised to become the world's third largest economy by the end of this decade, with a projected GDP growth of 6.5% for 6.8% for 2024-25. This surge in economic activity will drive demand for energy, raw materials and consumer goods, leading to substantial increase in shipping volume. I have got 2 more paragraphs. I'm not going to read them, but reading this paragraph suddenly brings something in my mind. Is GDP directly correlated with increase in seaborne trade? If yes, why? If no, why? Now GDP has got everything, right? It's got manufacturing, agriculture, IT, financial services, other consumption. So unless the manufacturing grows or import of fertilizers for agriculture and the products grows, shipping is not going to be much affected. So I'm sure my panelists will keep that in mind when they are talking to us. So let's start with Jayendu. Jayendu, you got 3.5, let's say 4 minutes. I'll be nice to you. Yeah? All right.
So good morning, ladies and gentlemen. It's really my privilege to be here back again in Mumbai. And I was just trying to think, when did I speak in Mumbai last? Actually, I spoke in 2008, which is like 17 years later. I'm here in Mumbai to speak in a shipping gathering. Thanks, Kevin, thanks, Andrew, and thanks, Marine Money, for giving us the opportunity to speak. So as you can see on my screen, I'm really going to talk more at a macro level, and the specifics and more complicated stuff, I would leave it for our esteemed panel, because they are right on the ground, they know much better than I do. So very quickly, for those of you who don't know what Drewry is all about, so we are into shipping or maritime research and consulting. And we operate through 4 different business units. One is maritime research, maritime advisory, supply chain advisory, and the financial research. For those of you who are interested in knowing more about it, please go to our website. I have just 4 minutes, so I'm just skipping this. So now, what you see in front of the screen is how has the cargo grown in the Indian ports, which essentially is a reflection of what's happening at the international trade level as well as the domestic trade. So if you were to look at all of these together, you see last about, say, 10, 12 years, we have grown at the rate of about 4.4%. So from a developing economies perspective, it doesn't look massive. Let's say, for example, we have been making comparison with China in the previous panel. China grew, when it was growing on the accession to the World Trade Organization in 2000, it grew at about 10% plus in most of the major sectors, just as a reference point. Now, if you were to look at, as Jagmeet was trying to say, does GDP really affect it? So of course there are various components of GDP, and manufacturing of course has the highest cargo intensity. Having said that, of course agriculture also has a cargo intensity, but relatively lower. Even services have a lower cargo intensity, but all of these sectors do affect shipping and the port throughput. So if you look at, let's say, go back 15 years, you see that we grew at about 6% per annum, that's the GDP growth rate, but our cargo throughput handled at Indian ports actually grew at only about 4.7%. So that's actually lower than how the GDP grew in past 15 years. Now, and if you see where are we really headed to, and so let's break down different cargo which is being handled in Indian ports. So of course the largest being coal, which is massively about 23%, and container is not very far off at about 22% in terms of really the tonnage. And the others, of course, the petroleum product is the largest, which is at about 30%, and second is coal, followed by containers. And if you look at coal and the petroleum products, for example, of course, we have made a commitment to sort of become carbon neutral by about 2070, so which sounds a little bit far off, still about 45 years away from today. But nevertheless, the government of India has been making a very consistent attempt to decarbonize the economy by increasing, say, the renewable sources of energy, which right now is roughly to the tune of about 40% in terms of the installed capacity, not really the generation. And in the recent budget, we saw that the government of India is promoting the solar cells, the wind power, etc., which hopefully will have an impetus and will move faster towards the renewable sources of energy. So if you look at that, and plus even EV, actually EV is also being promoted, was promoted in the latest budget, and I see that many even companies are actually pushing for the EV adoption by the employees, and some companies are giving incentive to do so. So while at the global level, the penetration of EV is to the tune of about 21%, in India it is still very, very small. But at the global level, definitely the EV penetration has been rapidly rising. I remember the first time we talked about it, one of my presentations was about 6-7 years ago, and nobody was ready to believe that it is really going to be a big force. But today it's about 22% or so approximately. And therefore India will follow the suit very soon for sure. And therefore I believe that the coal and the petroleum products are really not going to be a massively growing. It will continue to grow steadily, but really not massive growth that we can expect. However, the containers, cargo plus iron ore and ammonia and other gases, those are the areas where we'll definitely see increase in the throughput. Definitely the government of India has been trying to push for, let's say, green hydrogen, which will eventually be transported, let's say, to Japan in the form of ammonia, because ammonia is the most suitable carrier for the hydrogen, and there have been some contracts which have been discussed, and that's what we expect to happen in the years to come. Now, obviously, as it was talked about earlier, the LPG and LNG has been really a, I would say, let's say, shining star in the Indian international trade scene. So those are the sort of three sort of growth areas. And if you were to really translate how Indian economy has fared in the past, say, 15 years, and try and just do a very, very ballpark back of the envelope calculation, the expectation is that the economy will grow at about 6.5 in terms of a real GDP. So I'm not talking about the current crisis, but actually in terms of if you were to remove the inflationary impact and just look at the increase in the volume, that's about 6.5%. And if you were to really translate, if the economy tends to behave in a similar manner, it will be about 5.3% growth of the cargo. We need to be cognizant of the fact that the cargo intensity of GDP, or you can say how much incremental volume is generated by the future GDP, is probably going to be lower compared to what it has been in the past. So, so you can see that that's our very, very ballpark calculation. But if you look at some of the vision statement which the government of India has come to state, is that we are trying to grow by about have about 7 ports with 300 million ton capacity, and capacity of the port at about 4 billion tons. So if you were to look at translate where some of the top ports are, like Mundra, Kandla, Paradeep, JNPT, etc., it will have to grow at about 10% per annum. So I think I do see there's a little bit of a mismatch between where we can grow and where our aspirations are. So maybe I'll just stop here because I've run short of time. Thank you.
Definitely, I'm sure Kevin and Andrew will share this presentation with you and his email also. You can ask him lots of questions. Mr. Devkinandan.
Good morning, ladies and gentlemen, and thank you Marine Money for inviting me here. So I have a very small presentation, but before that I go there. As is introduced, I am chairman of Indian Maritime Center. It is the very newly formed body which combines every union association of India. So I cordially invite Marine Money to be a member of this, and it will be great to have you as a member. Thank you very much once again, ladies and gentlemen. So we can see that G7 and E7 countries today, G7 is $46.3 trillion economy, while E7 is 30.9. Going forward in 2050, we are expecting 69.3 and 138 billion, which is huge gap. Basically, G7 is going to grow by 1.5% and E7 by 6%. And if you take by PPP wise, it will be much more bigger difference. China will be almost 20% of the entire globe economy. By PPP, India is 15% and US is 12% and EU will be 10%. This is very important for a factor for our maritime sector because we are a service sector. In service sector, consumption and purchasing power is the most important factor which we consider. Now I see about Indian infrastructure or Indian sector, as a marine oil infrastructure, I see a huge, solid, background. So we have a very big consumption story which is going to grow fantastically. We have a youth population and we have a future world labor force. We have technology, you can see fintech and almost 50% of digital payment around the world are happening in India. India has a fantastic investment grade rating, which is BBB- and Ba3, which helps everybody to invest in India. There are a lot of incentives which is given by the government, and of course the GDP is one of the fastest growing in major economy. That also makes our Indian sector, very, very robust. Since we are consumer and consumer-based economy, India right now third largest, almost $3.4 trillion is our consumption market. It's going to grow by 28 to 4.6 and further by 30 to 5.5 to 6. So $6 trillion is our consumption. Why not the shipping and the port infrastructure going to grow? It will certainly grow because almost 90% of trade is going through the shipping sector. I also want to give one more point. So basically consumption is led by the urbanization also. This also we monitor quite a lot. So when there is a tipping point of 35 to 40% urbanization, the economy suddenly starts growing very, very fast. So you can see in what urbanization level was there, 35 to 40% in China was about 2003 to 2005. And after that, right hand side there is a chart how they suddenly start growing rapidly, which is like 7 to 10% of economy. So what China was in 2003 and 5, India is today. And I also tracked the other economies, they also grown very rapidly. So our expectation is that because of this 35-40% now tipping point we are reaching here, going forward India is going to grow very similar to China, if not very similar, maybe 1 or 2% behind. But we're going to have a very rapid acceleration. And this is further boosted by the government infrastructure spending. If you see almost in next 5 years, $1.7 trillion will be invested by Indian government, which is 53% of India's GDP growth is going to come through the investments, which is huge actually, and which is one of the highest in entire world's economies. Almost 143 lakh crore rupees will be spent here. 67% of this is going to go to core infrastructure, and 5x will be the green investment. Why I am talking about this is because shipping is all about consumption, as I mentioned. We are service industry, we are dependent on these factors. So there are very small slides on the Indian sectors and the port sector, how much cargo we are handling. So almost 1539 million ton we handle in 2024, and there is a growth rate of 3.8% at major port and 4.5% at minor port. We have two types of ports in India. Then if you see the almost Gujarat has 38% of cargo and followed by Maharashtra and Andhra Pradesh. And if you see the top commodities, coal is highest, which is about 26%, and container and crude followed by 21 and 17%. As my colleague has mentioned, coal may not grow fast, but container 6.5% is average growth rate which we have, which we continue to grow about. So I have 4 minutes, I want to finish in 4 minutes very quickly. So after saying all these things, I want to leave with everyone one question, that what we need in Indian infrastructure or Indian maritime sector to grow. This is my takeaway from there, that we need complete deregulation in Indian industry, in shipping industry, in maritime industry. And yesterday I spent almost 4 hours with the Ministry of Shipping team discussing about what will the form, how will we do it, what are agreements to deregulate completely. I'm very, very hopeful that very soon we'll see India's complete port sector and shipping sector will be deregulated very soon, which is need of the hour. Then we need to build capacities, we need to build mega ports, we need to have ship finance, we need to build bigger ships and container ship, as my previous colleague has mentioned. We need to improve the productivity because globally everybody is improving. We also need to improve it and reduce the cost of production. Then seamless multimodal transport is also very much required, which we are lacking today. And of course, if anybody wants to invest in India and shipping sector, they must have at least 20 to 16% return. We have been talking to ministry all the time about 16% minimum returns we need to have. Otherwise, we will not have the investment in the country. Investor need to earn. And then of course, lot of risk. Our contracts and agreements are that all the risks are on the investor, which we are talking about risk diversification or balancing the risk. Of course, we need to have a new technology in our country, and a lot of investment in the country is also, technology is also required. So this is my few words, and thank you very much. I'm available for the discussion if you want.
Thank you so much, really appreciate that. Both Jayentu and Mr. Devkinandan. Now, last in, first out, now that could happen. Alright, so may I request, now you guys have got 3.5 minutes, because some of it you have donated to our presenters, so up to you. Okay, Captain Vikas wish to go first.
Okay, good morning everybody, ladies and gentlemen. Thank you very much to the host and moderator to call me over here. I present Indian Maritime Center along with my colleague Devkinandan as the director and treasurer of it. So I am in sync with the money control and the treasurer. also in capacity of President of Postal Shipowners Association, ICC. Can you hear me?
Yeah.
Okay. So, is there any particular question, or should I say that how the postal shipping is moving? Okay. So there was a question in the previous panel about India controlled tonnage, and some people are quite confused about it. We have foreign audience also, so I'll clarify that a little bit. This concept of India controlled tonnage started in 2014 when DG Shipping introduced that Indian entities or Indian shipping companies who are doing the flagging to foreign flags, they can also be given the second right of refusal ahead of non-Indian ships. So there are Indian ships with Indian flag owners and Indian ships, Indian entities with foreign flag. Now this role is going to be expanded because, as you know, IFCA has CS in GIFT City, and in terms of priority now, the India controlled tonnage is Indian flag, Indian built, Indian flag, and Indian owned, and then comes Indian built, Indian flag, and IFSC, Indian IFSC GIFT City owned. And then comes foreign built ships and Indian flag, and then there are some 5-6 categories like that. So landscape has increased now. Also, now the Merchant Shipping Bill 2024, which was tabled in the previous session of Lok Sabha, is being tabled in budget session now, very much in progress. And this will come through. That is introducing also another way of registration. Now the Merchant Shipping Bill 2024, which will be called as 2025 Act, is defining registration as registration of vessels. And earlier 1958 Act defined it as registration of Indian ships. So vessel means a large gambit of things, and will include even the partial owned Indian entities having substantial stake in it, that will be defined later, will also become India controlled tonnage. So the landscape is increasing, and in terms of when we say cabotage, this will give huge opportunity of investing in any which way, and you will still be called an Indian registered entity. That way.
Yeah, I think today I was very happy to hear what Anil had to say, because the view was very different a few years ago. So that Circular 10 of 2014 calling Indian controlled tonnage, how can you be Indian controlled when you're registered in Panama or Liberia? So I'm happy. Ma'am, what do you think? Any views on that?
So I think I have the distinct advantage of being the last speaker, and thus I would probably need to speak the least because it's a very simple topic. I think it's a statement of truth that we are going to be talking about, and I think most of it is covered. But I'd first like to thank Kelvin and Andrews for having me here for the second edition of Marine Money, and it's indeed a pleasure to be here when I see such learned speakers and an esteemed audience. So coming to the subject, I'm going to pick up from everything that has been said so far. So obviously it's a truth that we are the 5th largest economy today, and we are poised to grow. I'm not going to say whether it's going to be 3rd, we could be 2nd as well. So why should I say it's 3rd? So we are poised to improve that rank going forward. And coming to what Jagmeet ji talked about, whether there is a correlation between GDP and trade, yes, these are highly positively correlated. And since India today has very attractive GDP numbers, we are the fastest growing economy without doubt. So once the GDP numbers are directly related to your economic trade, and as we all know that since 90% of the goods by volume and more than 70% by value of the trade happens through the ocean. So obviously that answers your question that the GDP, economic trade leads to increase in shipping. And India is, as Mr. Devki Nandan pointed out, that India is going to be, because of the GDP numbers, high investment in infrastructure, a lot of manufacturing going to be happening, is going to increase the demand for bulk shipping. in a large way. Of course, containerized shipping is the future of shipping going forward, and that is going to come from the consumption, which again Mr. Devkinandan talked about. And this consumption is going to be spurred by the recent budget announcements, where we have this rapidly growing middle class, and this is going to be actually the largest section of the Indian population, which is going to be a large consumer. Because of the tax advantages in the recent budget, there is going to be a high level of disposable income which is going to be available, which is going to lead to increased savings, and these savings are going to again spur investments. And on the other side, the disposable income is going to lead to a lot of demand for white goods and other consumables, which is going to increase the requirement for containerized shipping. India is a bright spot today. There are a lot of challenges with respect to the global shipping, but once there is a challenge, there are a host of opportunities which can be tapped. And I think the current state of the Indian economy is going to redefine the format for global shipping in terms of the structure, the partnerships, and how the shipping is going to grow.
Thank you, ma'am. And I think, considering the time, I'll give you 30 seconds each of you. You covered the last sentence. You did mention about effect on the global shipping. That's the topic. So I would like you to think about it. What impact is it going to have on the global shipping? The increase in Indian shipping, is it going to be so significant of global shipping that the overall contribution to the demand miles, ton miles from global perspective is going to increase? And if it increases, how is it that the benefit will come to India, or the entire freight will continue to go out?
So I'll start again. So this is a two-way sword, I would say. That once we already established the fact that the increase in the size of the Indian economy is going to increase the demand for global shipping. There's no doubt about it. But considering that the Indian tonnage is not that large enough to support this demand for the shipping services that are required, like Devki said, it's basically a service sector. So yes, there will be a lot of outgo of foreign exchange, but considering the recent trade pact or discussions with the American president, with our Prime Minister, the Honorable Mr. Modi, LNG and gas, energy is going to be one thing which your ton miles which you talked about is going to significantly increase. And of course, since we don't have Indian bottom vessels, the freight, foreign exchange is going to be one factor which is going to be strongly hit. But there's absolutely no doubt about the fact that India is going to be a demand center as far as shipping is concerned.
Can I add something more on this?
Yes, sure.
See, I was at Oceans Dialogue in Delhi in November 2024, where the shipping minister announced a very bold statement that India will have 10% of the world. Indian flag will be 10% of the world, which is now less than 1% right now, in a decade's time. And second announcement he made was that Indian shipbuilding will be 10% of the world. So as we all know, about 85-90% right now is with China, South Korea and Japan being the shipbuilding nations, and rest 10-15% is all over the world. So it's a very steep target. But I think it is doable when you're saying about 10 years. See the demand within the coast of India, we are just doing 5% of our logistics on the Indian coast by the coastal shipping, which can go up to 30-35% of the developed nation, including China. And that means there is a lot of demand inherent, and domestic ships are required not only to do the legs movement of multimodal cargo within the country, but also to do the evacuation and supply to the EXIM trade. So when the EXIM ships are coming and the Indian ships and the ports are becoming bigger and more deeper, then in that case there will be more ships coming in, and that evacuation and supply has to be done by smaller ships. So there is a lot of scope. And last thing, the sentiment within the government of India right now about shipping is very high. It has found a lot of space in the union budget, and shipbuilding announcements and all. We have Atre also here. He is a shipbuilder in Goa. We'd like to hear from you what is the effect on that after the discussion. So there is a lot of shipbuilding capacity which is to be built for larger ships as well as smaller ships. So I will bring the emphasis also on the smaller ships to be built in India, because when I bought my first ship, I brought it from Singapore. There is a mobilization cost on that. The OPEX cost in India is slightly higher than the global benchmarks, but it can be brought down because as IMC we are going to talk about it, policy reforms and all. Minister himself encouraged that you as an autonomous body, as Indian Maritime Center, should bring us the policy reforms and we will do it. So this is looking very encouraging. So I'm saying more out of a sentiment, and we have seen the statistics, so the sentiment is very high.
Okay, Mr. Devkinandan, your recent meetings at various places. So if you could distill it, maybe in few seconds, 30 seconds or a minute, where do you see we are going? Is there enough willpower, political will to propel us literally forward to meet those such ambitious targets of 10%?
Thank you very much for asking that question. And if I say yes, it's extremely now the shipping ministry and all entire ministry is very positive. They really realize that shipping reforms are very important part of India. Right now at various levels we are ranking 29, 32, and in shipping that is more than 20. So everywhere if you see the ranking more than 20. And we want to be number 3 economy very soon. How can this be mitigated? So there is a huge gap. If we don't do it now, then it will be very difficult to do it later. So to answer is straightforward, yes, we are now seeing extremely, the interaction between the stakeholders, and very rapid growth is going to happen. So I see going forward from 20, even if we come to 10 or 6th worldwide in ranking in various places, government and private and all the players need to put a lot of efforts. And as Madam Joshi rightly mentioned, this is a sector where they will see a very bright future in going ahead. That's my very small answer.
I think that's fantastic. Shall we be ending with this optimism, but not without asking Jayentu something? Yeah. So after listening to these people from the industry, I'm an arbitrator and a trainer. You are from industry. What is that? Analyst. For them, what advice would you have? What are the low-hanging fruits that they should be plucking first?
Okay, it's hard to give advice to the stalwarts of the industry, but I'll just quickly look at some of the variables of the Indian economy. And when I see last 10, 15 years, let's say, the manufacturing or the contribution of manufacturing in the GDP, it is, depending on how you measure it, it is still at about 25, 28%. It hasn't increased. That's number one. Number two, the export-import intensity or the trade contribution to the GDP, unfortunately, hasn't massively increased. It remains at about, let's say, 45-53% of that region. So to my mind, for the Indian economy to really catch up and meet all the aspirations that we have set for ourselves in various vision documents, these two variables probably have to be at the center point, which means that you have to have a manufacturing push and export or import-driven economy for it to ensure that you are able to catch up with those targets that you set in terms of ports, shipping, whatever other variables. That's number one and two. Then I would think that in terms of the regulatory aspect, I think Mr. Devkinandan mentioned about deregulation. That's definitely, I think, is something which we need here. And second thing that I think, which is probably one of the targets of the Ambedkar vision and which has to be done, and it has been long outstanding to my mind, is the standardization. In terms, let's say, entirely the policies, the port infrastructure policies, right? There's a state and then the center and there's a major port and the minor port. There are a lot of issues out there in my mind. I'm sure Mr. Vej will have a view on that, but I think there needs to be a standardization there to ensure that there is a seamless development taking place. That's what I would say. Yeah, I'll close there.
I think, ma'am, if you're saying I can't say no, but I can see Kevin
I'll
looking
just
at.
take 30 seconds. I want to end on a positive note. I want to just put a small request that your CAGR numbers for India, are a little skewed because you're looking at 15-year data, which includes that period of the COVID, where the numbers are very low. But if you look at the 23 number, it is at 10% now, which is the standard thing. So my request is, and that is probably the reason that the credit rating for India isn't improving, because statistics is a lovely subject. You can really project what you want to project depending upon the base and the data you take. So I think let's be a little more optimistic and give India the credit that we are the fastest growing economy and there is a bright spot here.
Thank you so much. Ladies and gentlemen, thank you. One more round of applause for my fantastic. I love that standardization part. Convert 100 kilometers from the coastline inwards, straight under central government. Everything will be solved. Okay. Thank you so much.